Happy 4th of July to all our people who follow us and know us around the world. We're going to be talking about history of the S&P 500 movement, and we're going to be very clear as what will happen in the price ranges on the S&P for the S&P 500 index. And here it is. So we're going to go back to where this rally started, and it started in March of 2009. So we have to go right over here to 2009, and we have to take that leg. But before we do that, I do have a trend line down there. What we're going to do first is we're going to take a look at the history of the S&P 500. And in 1996, we had economic expansion, and then it failed. And the economy went straight down again. And we can clearly see that this was over here in 1997 with the 2001 reversal. Basically, we made these bottoms in March of '03 when we went to the Iraq War. And then we had another expansion. You can see the trend line. That was another economic expansion and another failure in 2007. And we were there and we were short all the way down when it fell. And you could make money. Now, we're going to take that 2009 right here, and we are going to take the following so you can see right here how long that this environment has been. And yes, there's improvements and tax cuts and geopolitical, you name it, whatever you want to call it. A bunch of hogwash as far as I'm concerned. Has nothing to do with what's going to really happen with the price and what side of the market's going to be paying. And this is that longer expansion. Wow, look at that. And now in 2018, this is year 2007 on a monthly. High frequency trading technologies at that point in time. If you go back and you look at this breakout leg, which was the late stage of it, and you can see in 2007 how this market blew out up to the top. That was high frequency trading algorithms that create what we refer to as a market maker is the actual longer term bid and ask price ranges. Now let's go back here in a minute, and this is a monthly chart. Now year to date right here, here's how it works. So let's just take this part of it, and we can clearly see that rising 10-month moving average. But what do you see for the previous month? You've seen a very narrow range in price, and you did. We had bigger red price over here, the red prices going down. And every time we hit that blue line, that's a 10-month moving average, it's still rising. And yeah, they broke it below it, but they managed to always get it back above it. But yes, it's been going up higher in value, but this is going to be the part right here. Because that was a monthly. A lot of people in the retail world would call it a doji in their terminology. We don't, follow that or do that. But that is the public view of things that may or may not be going on. And how do you make a lot of money? And I'll show you why. That 10-month moving average, the value of it is 2685.9. Now, that's going to be that support line. It's been working for a long time. That's the blue line. The red line is a 20-month moving average, and it too has been rising. Once we break below this 10-month moving average, there will be what we refer to as a washout or a flash crash type deal. This is the previous month. We can see it clearly. Look at it. It slid the bid off of the highs, and then it came up off of the lows. But look at where the price was. It was very super narrow range. And commitment from the buyer did not hold as anticipated. So that means the market reversal from a monthly view, mathematically speaking, and only. And this is July, it just started. But the body of the price is still below this cross right here, the red part. So it means that there is a monthly reversal, and it also tells individuals that we're going to take this high, and we're going to take it right over here to that high. Now, they slid the bid, so the sellers are there on the way down. Now, so far, and today's July 4th, everybody, on a monthly S&P 500. So the S&P is going to have a 4th of July movement. I can tell you that beyond a reasonable doubt. And basically, they slid the bid, and that these highs are mathematically lower. We've only had the beginning of the month. However, we're going to be looking at how the prices keep slipping off of their highs. And when they go down off of the highs, and equities drop and options go up in what we call option volatility, price prints that go way up there for you, and then you have to get out. And it proved to do that with equities. That's the monthly S&P 500. I made this for a video for many years. The extension of this so-called recovery is coming to a top, and that this will, with price discovery, within using our own applications that we have, built in everything that a person would want, and that is to know how to make money with a big top. So here we go. So we peaked here, and high frequency computing computers did what we call a buy script, and this is the 2018 support so far at that 10-month moving average. The problem is that this month right here, which was, go ahead and think about it, that was June. And these highs on the monthly level are getting up there, and we're stretching out on that blue line. That's the 10 month. Once it breaks it, below it, we can see here, going back where my pointer is, this blue line, you can see how the price popped. And what would that do? Well, I can tell you what it will do. Right now, happy 4th of July to everybody, and guess what? Follow our footsteps and understand where the money will print. This is a special, like I said. So what we're looking for, when the breakout happened here, this is where the real the real tune of the marketplace is, that when we get back over in here, we can clearly see that we made a bottom right here in 2011 right there. And we made it, and then they did pop it on a 3-month breakout to the high in 2012. Now, when you take a look at the 2017, you're going to see the following. You're going to see the highs that were put in, and it was at a certain price, and you can make a lot of money by understanding that the market topped out on a 52-week high in January at 2872.87 pennies. We came down, we hit the blue line, 10-month moving average, and it came right back. And they closed it up here. Did never go above that top. But look what happened here. We had a reversal back again to the blue line. The bottom is the wick in the price, and it managed to hold it. And now it's going to set up to have a major crash. I didn't say that was going to be this month or next month. I'm telling everybody how this can happen and what side of the market to purchase to make a profit and walk away happy. So on the monthly, here it is. 6/1 January, 27.91 was the high. The low of that move was 26.91.99 pennies. That was the actual low. Now, when we take a look at that price going down in value, this is what we're looking for. And it's very simple. When we clear it, you're going to see that is the July movement right there. That is the reversal. I made an X, man. And now that is the final part of the monthly cycle as far as calendar 2018 did so far. And we've never gotten back above that high. And I'm just saying, just by taking this high in the wick, and then that connects to a reversal, okay, and it does, this longer line that I'm going to point to is going to go to that high reversal right there, off of that original January high. And you can clearly see that, you can see that trend line, it's right there, and that's what it is. Now, you see the X. This is the beginning of July. July does like to put bottoms in markets. And the earnings season is coming. This could change. But right now, the price discovery for this calendar year is we do have the reversals in here. And if I take this high right here and I connect it to that low high, we can clearly see across there where the price was declining in the SP 500 INDEX, and how to trade SP 500 options. Here's another view of the 2016 low that we put in on a monthly level on the S&P, and they ran it right here. So this was the real breakout of 2017. Everything went parabolically up. But as we go ahead and look here, this was an economic expansion, the longest one in U.S. history. And the really, yeah, it is. And basically, it's very clear that what they did here is totally abnormal. A machine did it. And, artificial intelligence has been making ground movements. But that is the 2016. And this is, when you take a look at it, and I'm going to do it one more time, and we're going to make money on this, and we have to know when it's going to be the weakest. So we're going to take this bottom one more time, and we're going to run that up, and we're going to connect it right there. That's going to be that top channel that it was rising. The blue line is a 10-month, and we've always managed to get snap back. But now we're in a major trend that is developing with the earnings season coming forward, just so you know. All right. Happy 4th of July with the history of the S&P 500 and the rest of the manipulation that's gone up. This is the yearly expansion. It's going to come down, and it's in a topping process with the earnings season coming upon us, can change this very quickly. So join the free 5-day trial, and then you'll know how to get in here. Either I will talk with you or one of my managers.